interesting that maybe consumer bets, we all know them because we use them, but perhaps they haven't got the valuations of the semiconductor, the software space of late. But what does consumer resiliency look like?
Well, first off, Caroline, good morning, and I wanted to thank you for having me here. Um, and for those who may not be familiar with me, as Caroline said, I'm a managing director at BAM Ventures. We're a pre-seed and seed consumer-focused fund based in Los Angeles and built by the founders of billion-dollar public companies like LegalZoom and The Honest Company. And then, as you mentioned,
Yeah.
had the privilege of investing early in household names like Sweetgreen, Snap, Scopely, NerdWallet, et cetera. And to your question, it's interesting because I think valuations are what catch headlines, but we often underestimate the inputs that it takes to get to those numbers and also the equity breakdown. So, for example, a company that exits for $5 billion is a eye-popping amount. But when you look at the cap table and you see that a founder, owned 2% of that business, they actually made less than a company where the founder owned 25% of a $500 million exit. So the valuations are often, particular on the brand side may not be there. On the tech side, of course, they do have that potential. But the equity outcomes for the investors and the founders, you'd be surprised to see, are often much better.
Yeah, and so you're very much trying to align oneself with the founder and with your own legal background. I'm sure you're ensuring that they maintain a lot of holding and serve themselves well by having ownership of the business as it matures and takes funding. What then about finding these diamonds in the rough? How are you deciding, okay, this is a startup, a consumer-facing startup that is at a pivot point, it's about to go up and to the right?
We have this internal mantra that we say that we have to love the founder and not hate the idea. At the stage that we invest, it truly is about the founders. And we love what we call the silent assassins, the folks that are focused on building their business, who know their customer, who know how people actually operate. There are a lot of things that we theoretically would like to exist or like to do. I'd love to be the fittest woman in the world, but, maybe I won't put the effort and time into an exercise regime or counting my macronutrients. And the founders that actually understand how people live and behave and what gets them to a purchase decision is really what we're looking for.
And do they do that via EQ, or are they doing that through data? What do you want to see when one founder that you don't hate the idea of comes and pitches you?
Yeah, I think it's both. And I think more importantly, it's around understanding not only their consumer, but themselves as well, what their strengths and weaknesses are. So if there are incredibly data driven, maybe they hire a team that is very EQ and brand driven, or vice versa. If they're incredibly brand driven, then they hire a team who understands operational efficiencies and knows that they need to hit their margins. And so I think the most important thing we look for is a founder who understands their customers, as I mentioned, but also who knows how to hire around them.
Look, you've been at angel investing for more than 17 years. You've been in your seat at BAM Ventures for a number of years. And what are valuations like at this particular moment? How are you looking into 2025 and thinking about whether these are the right sorts of checks to be writing at the right valuation?
Yeah, I think that valuations are very specific to the sectors. Right now, you hear about the buzzwords of AI or crypto, and they can command a hefty valuation. They also are very capital intensive. I think, to the point I was making at the beginning around the inputs and the outputs, a lot of times funds will back into valuations based on how much they need to deploy, and it may be detached from how much a company itself is actually worth. If you're a large fund and you need to write $10 million checks and you love a particular category and you give them $10 million, then you need to back into a valuation from there, as opposed to investing in a company they may not need as much.
It's interesting that you said crypto is sort of the buzzword. And sure, Bitcoin's been the buzzword, MicroStrategy has been the buzzword, but are we seeing more and more founders coming to you with a Web3 adjacent company now, or a consumer focus that is building in Web3 once again? Are we at that stage of the cycle?
We are. We see a lot of founders who have a Web3 component. I do see it having come back into vogue. And like I mentioned, AI is the mode du jour.
And to that point, when you're a consumer founder, is it just that you want to see AI boosting productivity internally rather than trying to back themselves into a generative AI business?
Do you mean what we look for as investors or what founders are pursuing these days?
Yeah, what are founders pursuing? What are you seeing and what are you wanting, briefly?
Yeah. Well, what we're wanting, the way that we think about AI is the way we think about the internet. It's like if a founder came to us and told us they're building an internet company. I think it's ubiquitous, it's necessary, it is the future. For us, we're really looking at the other elements that will make you a successful business, what your distribution, your team, sales and marketing. The AI itself, for us particularly, and at our fund size, is not the sole determinant of whether a company is attractive or not. And I think founders are catching on to that as well. I think there was a period of time where just adding a .ai
Yeah.
was, they thought, was changing things in
Right.
terms of attractiveness. But I think at this point, founders are starting to realize we need to show
Shamin.
some differentiation beyond that.